They're
Ken
not going to
Griffin
keep
is
coming down.
stupid and he shouldn't build his building and all of his projections are wrong. Let's tell him that too. Miami price is down 12%. This is a complete misrepresentation of a major US market.
Inventory has absolutely gone up a lot. It's gone up a lot, but has it got up to a dangerous level?
The lower you go in price, the worse the market is performing in terms of sales volume.
Do I hold off and wait for another year? Are things going to get better or could things get worse?
Building age is a real factor. It's a different species of product.
51% of the population of Miami-Dade are a paycheck away from bankruptcy. Don't fear that market. Don't fear buying in that market.
No.
It's transitioning out from
You need that market up.
that your next person who buys your unit may not be a renter. It might be an end user. The number of sales has massively dropped. But I think that doesn't tell the whole story. What the hell is going on with the Miami real estate market? My name is David Siddons. This is the Better Decisions podcast. Here today I have again Ana Bozovic with me. And I was going to get into the market, or I am going to go into the market, but originally I was going to do it just sitting there talking to the camera on my own and kind of going through it. However, I got so many comments from so many different videos. I felt that this was a moment that I would sit down with Ana again. And rather than being more kumbaya and us agreeing, which we do have the same mindset, quite honestly, we agree, I'm going to play devil's advocate. I'm going to do what so many people are online are making comments on, and I'm going to try to put myself in their shoes. I'm going to try to understand where this mindset comes from. So let's get into this. Let's give some actionable advice for the real estate market as of what is November 2024. Okay, and we're going to give guidance to the year end and into 2025. We're going to also reference a little bit of our friend Craig Studnicki's report for the ISG related report that just came out. I am going to give one caveat before we start this, and I want to be clear. I am not doing this podcast for clicks. I am not doing this narrative, or we're not having this narrative for the Florida market in general. We are not talking about Miami-Dade as a whole. I am not interested. I'll say I'm not interested. I'm not focused or talking to those people who have $400,000 or $500,000 homes, the median average within the market. I am talking to those people who may be buyers and sellers in our main Miami markets. And I'm going to reference those, the Condo market, the urban core, Brickell, downtown, Edgewater, Coconut Grove, the Miami Beach area, Bal Harbour, Surfside, Sunny Isles. I'm talking to the home market, Coconut Grove, Coral Gables, Pinecrest, again, Miami Beach, Venetian Islands, Key Biscayne. And we are looking at what I consider the entry level into the luxury market, million and up. If you come below that, or if you are outside of that, this probably won't be relevant for you. So just click off, go and grab a coffee, do something else. If you're curious, you can listen in, but I'm not talking to you, and I want to make it clear. So if you want to make comments, and I want you to, if you like this podcast and you want to make comments to engage with the conversation, please do so respectively to the market that we're talking about. So without further ado, let's get on with it.
Let's get going. Exciting.
Okay, Ana, you have you've got a very strong voice in the market, but most importantly, you're very analytical. And there are some things that have been bothering you out there more recently with news and information coming through that's being put out there.
Correct.
And I think we might as well just address the elephants in the room.
Absolutely.
What is it that everyone's been saying? Let's just start off with those key points. And what is your response to those? Because I know there's a lot of misinformation that's been put out.
There's a great deal of misinformation being put out. And to echo one point that you said about what's in the news and clickbait. So Elon Musk had a great quote a few weeks ago. He said that legacy media is a click maximizing machine, not a truth maximizing machine. And I think that psychology sort of permeates the conversation today. So I put out a report quarterly I have for the last 10 years, and I segment the entire market in great detail. So I'm an expert in this market. I know when things are extremely incorrect, it jumps out at me. And I can't help but notice that the news these days is full of extremely negative, generalized Miami stories, where not only are they incorrect with their words, but they're publishing numbers that are complete fabrications. Words you can excuse. You could say, oh, you misinterpreted, you could talk in circles, something. But when you publish a number and the number has no basis to reality, it makes you wonder what is going on.
So
here.
let's dig into what those numbers are and maybe understand why people like latching onto them, where they're coming from, and where that psychology is manifesting.
I have a number of theories here on this, actually. I think it's a combination of factors. One, it's that click maximizing thing. If it bleeds, it leads. People like to create apocalypse stories, negativity, all those things. And then also, I can't help but think that there is an aversion to publishing a positive Miami narrative, because we do have segments of our market that are extremely positive. When you look at data sets and you see spikes in data where things are at all-time highs, 10x versus where they were pre-COVID, and we have this in certain market segments. Single family past 2,000 a square foot for the first 3 quarters of this year had almost 10x the transaction volume of pre-COVID. Where is this in the media? All we're hearing is apocalypse. So many of these stories originate in organizations that have journalists working for them that are based in what I call our feeder jurisdictions, the places from which we are extracting taxpayers. We had 2023 data that came out last week showing migration patterns across the country again last year, and the pattern played out. Texas and Florida are the big winners. And so I think there's 2 things. It's if the bleeds, it leads, plus this sort of identity crisis that they have with regards to publishing positive Miami stories, because we have really good ones.
Being like playing the devil's advocate, like who cares about super rich people paying over $2,000 a square foot, really, really wealthy, coming in? There's such a small percentage of the market. Why would that be? Why would that necessarily be a good thing? For those people who are like that 3 to 5 million range, the working wealthy category, or the 1 to 3, surely those guys are just going to continue. Who cares about that group? Why should we care about these big sales? What's the value of it?
Excellent question. Just from a pure human interest story, they're good headlines. Normally they would be a headline. Now they're not. And also, even at those entry points of luxury to $1 million and up, we are still far in excess of pre-COVID transaction volume. And for the condo market, we're 72% all cash at $1 million. So we have these generalized headlines about the Miami market being a bubble, for example, to that point, right?
Yeah, that's one of the points.
Right,
Obviously,
that's one of
the bubble is the first
saying,
one.
Oh, Miami's bubble. And I said, what? I read that whole study, and they based their definition, their conclusion, solely, it seems, upon the rapidity of price appreciation, how quickly the prices, median prices have risen now versus pre-COVID. Okay, that's not the only factor.
Well, they did say, they came back and they said, look, they used their headline to get the click. We understand that. And then they said, well, actually, it's not a bubble, it's just really expensive, which is kind of like...
UBS said bubble.
Oh, they said bubble in the headline,
right?
But then in the
like bubble
in the context as they went into the language, and again, I'm not condoning this. I'm just saying that they were playing the game of let's get people to read this, because again, you write bubble anywhere, you write collapse, you write explosion, you write anything that involves something that resonates and sounds like war at some context or another, and you're going to get people are going to click. They're like, limbs lost in Miami. I mean, again, it just sounds like...
Alligator got you.
Yeah, super dramatic stuff. But then when you read into it, they were like, well, it's just super expensive. And I guess the question that gets raised from that is, will the super wealthy just keep getting wealthier? Is there enough of them to support this particular luxury market? So when does it stop? If it stops.
On a global level, there's another report that came out recently that the percentage of ultra high net worth individuals had a record percentage increase last year in this country and globally. It's part of the ongoing wealth polarization that I and other people have also been talking about. So I think to that point, there is a general growth in ultra high net worth people. But we're not just talking about that segment. $1 million plus isn't that.
Yeah.
$1 million plus is...
But before we get into that, because that was a good point, and again, this is just elaborating on that original point of wealth. The number of millionaires grows.
Ultra high net worth individuals, which is defined as, I believe, people with a net worth of over $30 million.
Okay, so that's grown. Even people who aren't worth $30 million, those people who have become millionaires, that number has grown.
Correct.
And one of the reflections is, where do those people want to live? Where's the movement patterns for that particular wealth crowd? Looking at the demographic split of who's in the city, the number of millionaires that have moved into Miami that exist now today compared to say 2 years ago or 3 years ago. If you build it, they will come. If the buyers exist and if the wealth is there and the product is there, then we understand why you'll see $2,000 a square foot.
Correct.
The question is, and again, this is for the guys who are coming in and looking at the $15-20 million properties. Can they, and again, simple, can they sustain those sales as we move through for the next 5 years?
I mean, that is the question. My answer to that is that the first 3 quarters of this year have seen record transaction volume at those levels. And at that very expensive $15-20 million house point, we're at very high levels per square foot, right? So
even in what's considered, I guess, it's not a particularly friendly real estate landscape right now.
100%, that's correct. That's absolutely right.
Interest rates, et cetera, et cetera.
Correct. Right. Well, I mean, we're at 77% all cash at that point for single-family homes in this market. But there was record high transaction volume for the first 3 quarters of this year, over 2,000 a square foot. And we're up 875% versus pre-COVID. That's almost 10x. Inventory, while it's higher at that high point than pre-COVID, it's not up 10x. So the market's tighter than it was before.
Yeah. Now there is, within that luxury, and we're going to get into the $1 million market. We're just playing around with the ultra luxury market because it's always, it's an interesting area. One of the things that we're observing, I've observed, and this is just a personal observation, is I've seen some like very, very, very high, I'm not going to go crazy, but very, very high asking prices for some product that comes into the market. And the question that sometimes people ask is like, where's this justification coming from? Because I understand we've got record high dollar per square foot. So we've seen a number of over $5,000 a square foot sales in the condo market this year. We've seen a few over $6,000 a square foot sales in the condo market. We've seen a number of very, very high record-breaking sales in the new condo construction market this year. Number of penthouses trade. I guess the question is, just because you park your Toyota next to a Ferrari, does that mean you get to ask the same price? I feel like there's a lot of older product that people are just jumping on the bandwagon. They're trying to ask like really crazy numbers, and then unsurprisingly, they're not selling it.
That's an important distinction because we have tons of data that indicates that this wealth and talent migration very much is gravitating towards new product at prime location. And that's really the bifurcation of the market. It's new product at prime location, be it condo or be it single family, that is outperformed by leaps and bounds. The rest of it is a mixed bag.
Yeah. And this, he talks about the house type A and house type B. And this is one of the things that happens. Like when we get into the markets, and I think when we're having these dialogues, the truth is that, and we're going to get into the actionable advice as we go through this conversation, because a lot of people look to it and say, all right, so what do I do with this information, right? There's a lot of data that comes out in reports and people say, all right, that's fine. But what do I do with that? Like if I want to buy or sell, like how does this relate to me? So we're going to try and make this relatable.
Whatever one is thinking about buying or selling, make sure that you're consuming information relevant to your market segment. That's the most important thing. And that is more than just the price. Because within the price, the age also, 1,000% true,
and that's like the second big thing, the second big news piece that I guess everyone's throwing around right now is the rising HOA fees on a significant number of old condos and the fear of collapses, and
it's very real. But you know what? Even despite that, people are saying, "Oh, condo apocalypse." If I see another condo apocalypse headline. Where is this in the numbers? Median condo pricing on a county level is actually up 1% year over year.
Talk us through those numbers, because I think naturally there's so much conversation about all old condos are just a disaster. We're writing a report right now, and I asked my marketing director, let's do this. I want to do a report, and I want to take all the buildings, and I want to look at the best and the worst performing condos of 2024 compared to the last couple of years. And of course, you're going to have the ones at the top, which if just top of my head, the best buildings that we've actually had perform. So the best performing buildings this year, you got buildings like Park Grove in Coconut Grove, Surf Club and Fendi in Surfside, The Addition, W South Beach, Apogee, Continuum. No surprise there, because these are like the ultra luxury buildings.
What I find fascinating with the Apogee as an example, I'm noticing a pattern also that buildings that aren't super new, because the Apogee was built, 2004, I believe it was, right? Yeah. So buildings that are not super new but have large floor plans, because that one, of course, is just 4 units per floor plate. They're 4,500, 3,500 square feet. The corner and the middle ones are 35, 36, whatever. So product that could be single-family replacement, that's not short-term rental and that has larger floor plans, is doing very well despite its age. And I think that's partially due to this sort of overlap of single-family demand, because the single-family home market is so tight, especially within proximity of the urban core.
And that's actually that gets raised by Craig Studnicki when he was talking about the number of sales for condos relative to houses. We have seen a bit of a shift into those bigger condo units. Interesting enough, you raised the point about, some of the older buildings aren't necessarily bad. They're well run. They've got good floor plans. They sit in a good location. They're completely redeemable. Let's not just throw all of
Aperture's
them
last
out.
2 sales were at $3,500 a square foot for a building that's 20 years old.
Yeah.
That's remarkable.
And interestingly, if you get into some of the newer buildings, there are still some new buildings that are actually performing very weakly. Porsche is performing weakly. The Muse is performing weakly up in Sunny Isles.
The Porsche's had challenges. They have over 30 active listings, only 7 sales in the last 180 days at levels that they sold originally for in 2017.
Yeah, and Rise, SLS, Brickell, Oceana, Bal Harbour has had a bit of a slump this year. And then obviously you've got some older buildings that aren't doing as well. But I think the point that needs to be made is that once you get into any market, the truth of analyzing it and deciding the market direction cannot be just lent on an entire price point or a neighborhood or the city-wide and say, well, condo sales are down and inventory's up, and therefore every building that you go and make an offer on, you should be negotiating heavily and getting a really, really good deal on.
No, not true at all. You have to look at the specifics of it 1,000%. And one point that I keep making is also recognizing the power of proximity to the urban core.
Yes.
That's a huge factor. Just between Citadel HQ and Santander Bank, Brickell, just between those 2 buildings, and there are others, between those 2, there are over 2 million square feet of Class A office being delivered to Brickell. Those people all will need a place to live. And when we look at the Brickell submarket as an example, there was 1 building delivered in the last 5 years, and that's Flatiron, which has a ton of units. It's not a short-term rental product, but a ton of small units. So where are they going to go? It's single family or single family replacement, and there's not enough supply in actuality for that product within the urban core.
What did you see? And again, we've bounced from the expensive homes, and then we started going down into the $1 million. And I don't want to lose track of giving everyone the full perspective. We've gone from the super expensive, we've gone down. Now we get into that let's say the $1 million and up markets as we talk through. Talk us through. Let's start with the condo market, and then we'll get into the home market. Talk us through how you see, let's start with, the main one, the most densely populated part of the city, the urban core, the Brickell downtown and Edgewater. How have you seen those numbers for Q3?
The overall, the markets follow very similar patterns in South Florida and Cross County. Overall transaction volume is down for the condo market and the resales. Yep. But here's the important thing to recognize when we discuss the condo market. We have resale figures, which again also need to be parsed for new versus old. But then on top of that, we have pre-construction sales, which are enormous. And pre-construction sales are taking a large percentage of this demand for South Florida condos, and they're not reflected in resale numbers because they're off the MLS and they're not indicated as closed sales until the buildings deliver, until they get their TCO at the end and they hand over to the buyers. So we have thousands of units being sold pre-construction that are not actually reflected in our condo sales volume on resales.
And that sits in, I have my opinion on the price point, but this isn't the podcast about me today, it's about you. So give me your numbers in terms of the majority of the product that is new construction focused, rather than buying a resale, those who are buying
pre-construction, it is, given the cost of land and carry cost, interest rates, construction, blah, 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 it is not really possible to deliver a product at under $1,000 a square foot. It's not possible. I think that Related has a project in Fort Lauderdale that they're started at $950 a square foot on Dare, but even then, many of them over that. That's it. But that's out there. In our urban core, it's not possible. Everything that's new is at least $1,400-1,500 a square foot at this point.
So in order to buy this product, the bare minimum is going to be probably in the mid 1.5 and
unless they're small. So we have a whole segment of condo hotels that are coming to market. For excellent point to address that, because how do you deliver a product under $1 million, under $700,000, given the cost of delivery? And that's by delivering small units and making them essentially condo hotel products. And we have a whole lot of the pipeline that is that. But when it comes to end user, you're absolutely right. End user products need bigger floor plans, but you still can't deliver for a lower price per square foot. So they're expensive.
And I'm determining, and in one of the conversations that we have, and again, I like to address as we go through these, some of the comments that people make on my podcasts, and the one that springs to mind right now is those who have said, there's too much product in the market, there's too much new construction, new condos being built, way too many being built.
I don't think so. Listen, when pre-construction sales can be a little bit of a black box, of course, right? Because we don't know what's actually sold until they close. And another indicator, of course, is when they break ground, because then they can access their financing from their lender. So you can't lie to your lender. You can lie to the press, but not your lender. So if you've broken ground and you start to go vertical, you're probably 50-65% sold.
Yeah, and they are. So the comment, I'm going to read it out. And again, look, I like getting comments from all sorts of people through my podcast. I think it's actually great because I think it's important to address these things and talk about. But sometimes I don't address them on the comments below my podcast because it's just too extensive. So I think they need more explanation, right? And the comment that I got is that it was a podcast. It was a video that I did on the Mandarin, and it said, "I don't even need to watch this. It's not a deal. It's too expensive. If you're saying it's going to appreciate, you're going purely off speculation because Miami prices have been dropping rapidly for a while now.
That's
just
not
look
true.
at the numbers."
That does those things saying, where are these prices dropping? Median pricing for condos is hovering around all-time highs. Single family is essentially at all-time highs.
And this is off the back of me talking about Mandarin. So Mandarin's a luxury product, right?
Sure.
I'm not talking to you if you want to look at $500,000 condos. Fine, go ahead and do that. But don't have that conversation. Don't compare Ford to Ferrari. They don't worry about each other's markets.
At all.
Nor should you.
The Mandarin's doing great.
It
They're
is.
knocking it out of the park.
It is. And then the next one was, there's too many luxury condo residential buildings being built.
What says who?
Okay. So this is something that I wanted to address.
Right,
that comment.
they're saying, are they calling them stupid? These people who are buying these things, spending money? Money speaks. It's like a betting market.
Well, I have a theory on a lot of these comments coming out.
Okay.
No disrespect to you guys out there. If you're the age of 30 and you're looking at condos and you're thinking, okay, I want to potentially buy a condo because now you're in a position in life that you're probably likely to look down to that process. And I'm sure you probably listen to this and think, yeah, but there seems a lot of condos. I don't know if you were around looking and dealing with the market in the last cycle and the cycle before that. We were. That's not your fault. You just weren't around. It is what it is. But I can tell you that if you look in the last market, and again, Craig Studnicki has this on his report, there were way more. There was over 20,000 condos, new condos being built in the last cycle. And the cycle before that was 60,000. Right now, there's about 11,500, 12,000. If you look at the skyline, I get it. You see all this construction. You're like, wow, that seems a lot. That seems unsustainable. What's rather interesting is if you actually go back and again, look in the history books, buildings like Icon Brickell was 1,800 units being built in that project. 1,800, okay? Most of it was being built for investors. In fact, all of it was being built for investors. None of it was being really built for end users. And if you're an end user, you were an anomaly. And they built those units, and that was that market, right? Weirdly enough, it got absorbed in like less than 2 years because, again, the speed of absorption changes once prices change. That's the thing. It's a constantly changing system. But today, the average number of condo units that you'll see in a building is at the most about 300. Mm-hmm. 300 is considered large scale right now. And there's a lot of buildings that are 60, 70, 80, 100 units, whether it's the Paragons, the Rivages, and buildings like that on the beach, or even
100 units, 150 units.
So you could get five buildings into one building.
This is true.
And so if you look at the amount of inventory that we've got spread across the market, it's not as much as you think it is. And a lot of it then has to be like, all right, who's buying this stuff? This is where I've given my 2 cents. I want you to give the data and your understanding of the population change within the markets, not necessarily Miami data as a whole, because I recognize that not everyone is that, but the urban core population growth respective to the people who might be buying this product.
So I happen to know that we're seeing a lot of domestic buyer activity with pre-construction with the larger floor plans, whereas before pre-construction, I mean, it still is, but before exclusively was marketed towards the Latin American buyer as not an end user. Now we're seeing a lot of end users come into our market looking for these larger units. And in fact, I know at the St. Regis, they had a lot of combinations. People to that point, they couldn't find single family homes. So they went there and they buy 2 condos, they combine them because they're looking to it as an end user. And they're domestic buyers who are coming to our city to work in some financial industry capacity.
Which totally makes sense.
Mm-hmm.
And we've kind of seen this, and we've harped on about, the changing demographic profile of the wealthy coming into Miami. Obviously, a lot of comments now come out, and one of the most recent articles was like, it was after the storm, right? The storm is really bad, Miami's sinking, and everyone who was going to move down to Miami is now going to move back, or
and
they're
Ken
not going to
Griffin
keep
is
coming
stupid, and he shouldn't build his building, and all of his projections are wrong. Let's tell him that too.
So,
that's my
rather than saying this doesn't make sense, why do you think people are saying, like, where does this come from? What's the natural, reasoning? Because everyone has a reason why they say stuff. Like, why are they saying this? Why are they putting this out there?
Quite honestly, I think a lot of it is identity politics. I'd be curious to see where those people live. I think that there is a lot of almost resentment at the region's success post-COVID, because we had this sort of supercharged success cycle that we're in right now immediately post-COVID. And I think that a lot of people who disagreed with how our governor and how our state handled COVID are resentful of the fact that our version ended up being a huge positive. And perhaps are also resentful of the fact that we keep taking their taxpayers. And so I think there's a little bit of, they're not rooting for us, is what I'm trying to say.
And what are the media sources that seem to be less pro-Miami?
Almost all of them. It's fascinating. I mean, I recently...
Like New York Post, Wall Street Journal?
The Post is a conservative paper. It's one of the only ones in New York. So the Post will publish across the spectrum. I won't say they're so pro Miami, but they'll publish across the range. But the rest of it, I'll say it. Recently, I emailed the entire editorial board of Business Insider, which it's not Wall Street Journal, but they have a huge platform. And they published an article that said Miami prices down 12%. I said, what is this? Like, I just put together my Q3 report, and this is completely incorrect. It's not even close to reality. It's at the opposite end of reality. Yeah. We're on this side of zero, and they went this way. I said, what? And it seemed that they had copy and pasted segments of a Newsweek article that was also a complete fabrication from July, and I'd emailed Newsweek, and they didn't care. And this journalist at Business Insider, who actually contacted me on LinkedIn a week before this came out and said, hi, I published that in the Miami market. Would you happen to have any? And I said, why, yes, my Q3 report comes out next week. Here it is. Never wrote me back, never answered. Then this article comes out, Miami number 1 on the list for worst markets. They had a whole list. And based on this minus 12 number, like they're lying with numbers, not even words. How'd you get minus 12? Tell me. And so said list prices, asking prices down 12%. Okay, they didn't specify single family or condo, but it's irrelevant because neither one is down. So it doesn't even matter. Put them together, aggregate, separate, nothing is down 12%.
Are you finding that they're giving these statements, but they're not actually quantifying where this number's coming from?
They're not sourcing it at all. I mean, you can't replicate this number. It has no basis in reality whatsoever. No. And so I emailed their entire editor. I emailed like 20 people in this email, and I outlined it, and I said, look, here are the actual numbers. I understand that. I gave them, benefit of the doubt. I said, perhaps you don't know this was published. I understand your platform publishes thousands of stories. I don't know how hands-on you are, but just a heads up, this is a complete misrepresentation of a major U.S. market. Yeah. No one wrote back, and they don't care.
And this is like the segregation of data. And then again, once you take this data, and I'm going to get into some of these numbers that I pulled up, because here's the thing. Look, I don't go out and poll everyone either. I'm not going out onto the street with a clipboard and asking people their opinion. What I'm doing is I'm pulling data from the MLS and I'm looking at that, and then obviously I'm trying to get data from maybe some other areas. But at least what I'm not doing, and this is one thing that I think a lot of and this is just the nature of the beast of what we're dealing with the way that media has changed and moved. And I had a conversation with somebody from the Miami Herald yesterday of how it's becoming very, very hard. If you're going to be competitive in a news market, you've got to get the audience's attention, and how challenging that's been. Because there's been not just major news now, there's been a rise of secondary news coming through, and a lot of people using this. I'm sitting on here doing a YouTube podcast, and I'm going to start throwing stones at YouTube videos. But I am going to, because I think that one of the issues that we have is that there's no control about what anyone says on YouTube. People can say whatever they like. They can say anything. There's no editor-in-chief to edit them and say, you got to fact check. People will go on and they'll produce videos. They will take information from a national news source. They will use that as their reference, as their, let's say, their pivot point to the conversation. And then they will extrapolate on that. But usually what I find, and this is true, if you go out and watch almost any video and you just Google Miami real estate news or Miami real estate reports, it tends to be a lot of stuff comes up, which is, it's not even Miami wide, it's Florida wide.
Correct.
It just talks about the Florida, right. Like Florida's sinking, Florida's going underwater.
They'll have a picture of Miami in the background.
Yeah, and they'll have a picture of, yes. Miami. Or they'll be like, home sales are down and everyone's trying to sell, and there's a picture of like Coconut Grove.
Which is the tightest market in the
right. Exactly. I think there has to be a certain amount of responsibility of good journalism, and I think, look, I don't talk about certain parts of Florida. I don't know those parts of Florida. I don't know. I don't care. I don't care. It's not my market.
It's not relevant to what you do.
It's not relevant to what I do. But I think it's important to understand the data. So I'm going to dig into some of the data on the condo market, and then we'll get into it. Look, without a shadow of a doubt, we have seen a rise of active listings. If you compare it to a year ago, inventory has absolutely gone up a lot. It's gone up a lot, but has it got up to a dangerous level?
No, inventory is 30% below where it was pre-COVID for the county.
Now, of course, if things keep rising, and sometimes we can project and say, all right, which direction is it going in? But I think ultimately, yes, right now it's up, but is it to be concerned about? From a seller point of view, you've got to be aware you've got more competition. You've got more listings you're competing against. You've got to be more competitive. Are people going to start breaking records in units that are more than just average? I don't think so.
I don't think so.
If you have a normal, average-looking, run-of-the-mill unit, then no, you're not.
I agree.
If you have an amazing unit that's just like incredible penthouse, totally renovated, and that's the only one in town,
that's the Rolls-Royce conversation. There's someone who'll pay a premium.
There's someone who's a buyer for that. And we've seen those sales, the $20 million plus sales, has been proved to that. If I look at within markets of... so inventory's up. Inventory goes up because although we've got more listings, we have had fewer sales. The number of sales that we've got has dropped within the last quarter, and that goes through Brickell. The thing I think is more relevant is where has it dropped most? What is the product that's not moving as well?
So it's the same pattern with single family. In our market, the lower you go in price, the worse the market is performing in terms of sales volume.
Yes. Yeah.
It's the same pattern in single family. It's the same pattern in condos.
Yeah. The beach market, the condo market on the beach, I kind of break it into, I try to simplify it because I want enough data to make it make sense. Sunny Isles is down significantly. Sunny Isles inventory has really shot up.
So that could be part of what I keep saying about proximity to the urban core. I just thought of that. They're going to benefit less.
This is the aha moments. We put this all together as we go.
They're going to benefit less from all the office, the Class A being delivered in Brickell, for example.
And there is still quite a lot of older product in Sunny Isles. Bal Harbour is much the same. Bal Harbour hasn't had a particularly good quarter. That was also significantly down. Significantly fewer sales, a lot less activity. Again, these are secondary markets. I know people might have these as primary homes, but usually it's a second or a third or a fourth home. They're just there, if it's a unit in Oceania or something like that, or Fendi, it's because... this is a tax play. They're here for the 6 months and a day. Those very top sales are still happening at the very high end. When we look at the over $5,000 a square foot, it's the Four Seasons. You've got big sales at Satai and W. You've got, a penthouse is pending right now at Oceania. You've got some big sales that will happen at 87 Park. But those are like the $20 million plus conversations. Once you get into the 5 to 10 range, which is, the second property for a lot of people, that's where it really slows down. And in the older products, it slows down even further,
correct.
Which I think is relevant. And then when you get onto the beach, we're seeing a rise of inventory on the beach, without a shadow of a doubt. There's a takeaway here for buyers and sellers, because I'm hoping there's actionability on this conversation.
My one thing that I keep repeating over and over again is that you need to ideally align with inherent scarcity and the ongoing appetites of the wealth and talent migration. That's really what it is. We're seeing this play out. So it's proximity to the urban core and the scarcity therein, because there's only so much you could build within there. And of course, single family, we can't add more inventory vertically, which is why these single family submarkets that are so close to the urban core are really knocking it out of the park. Like I was mentioning, Coconut Grove sales past 1,000 a square foot are up 5,000% versus pre-COVID. The whole market's transformed. And so if you align, if we expect that this wealth and talent migration will continue, which I think it very much will. We had with the census release numbers from 2023 about a week or two ago. So once again, we're leading Texas and Florida are neck and neck for interstate migration, but we're 4 times smaller, getting the same number of people. So if we believe that this domestic wealth migration and shift in financial epicenters will continue, then the sort of the buying activities will be concentrated around these places of commerce, these urban cores. And so we also know from our data showing the extreme spikes in sales volume and high prices per square foot that I think reflect the appetites of the wealth and talent migration. When you see data like turn quickly, you say, what changed? What happened, right? Yeah. So clearly this indicates this new force in the market that isn't going away. It's at record volume. So I think the main takeaway is, one, we don't have one market. That's like main takeaway number one.
For sure.
The news generalizes, they create negative clickbait. The vast majority of transactions, just it's simple math, happen at lower price points. So when you report in the market as a whole, you lose it. You lose the story at the high end. It gets lost in the data because there's not enough of it, right, to balance out, to show. So recognize which market segment you're looking at, recognize that we have two segments of our market, and that new prime product has just begun to benefit from this wealth and talent migration. Look, our office market is super hot. I keep talking about that because it's connected.
Yeah.
It's an anomaly for the country, as is our pipeline. So all of these things, I think, show that we're still very much in the early days of the city's ascension. Like, we keep building, we're building class. Who's building Class A office at scale like that? Which other city?
But this is the urban core. So coming back into those on the beach, and again, I feel like those in the urban core are going to have a little bit more of peace of mind knowing what's coming and what's developing. But for those on the beach, and again, I'm thinking about those people who, let's say, I'm just going to take two categories. People who own condos, $3 to $5 million and $5 to $10 million in the beach market. And
Which
it
part
could
of the
be,
beach do you mean?
let's say Bal Harbour, Surfside, the kind of Miami Beach area. They're not in an ultra luxury building. And they're in a market where they've got their unit sitting on the market. It's just not selling. It hasn't been sold. They haven't had any inventory really move. There's been a few sales in the building. Are they in a position whereby what are they going to do? Because I have some thoughts on, there's a conversation is, do I hold off and wait for another year? Are things going to get better, or could things get worse? And should I get in line with my market price to sell it?
I don't think they I don't think they have huge benefit to waiting, because I don't see a drastic change coming to that segment of the market. Like, I think that the wealth and talent migration will continue. New exciting product will continue to shine. I don't see a drastic change in that segment of the market. But meanwhile, though, building age is a real factor.
Well, I have some thoughts on that group. And these are just some thoughts that I'm coming to. And every individual has a different situation. My first thought is this. Unless product is actually really well finished and well done, buyers right now are not being drawn to buy it.
I agree.
There's a lot of stuff that's just, it's ugly, and the quick fix is stage your unit, get it painted, fix it up a little bit.
I see this 100%.
Spend some money on the unit and make sure you look at that. The second thing is, really make sure that you understand the financials of your building, and make sure your realtor understands the financials. And this is why we're digging into it, because I don't want to throw the baby out with the bathwater. I would like to champion and be the champion in a number of older buildings to really sell those, because I think they are good buildings long term and they are sellable. Some are not.
Some are, though, absolutely.
But some are.
It's not the same.
Some are.
Yeah.
My next thought is that with the introduction, if you are asking a high price for your product, I think one of the biggest problems that people need to recognize is that they'll come in and they'll like, I know, I'm not going to say who it is, but there's someone I know who's going to do a renovation on a really big unit in an older building. It's not old, but it's older, but they want a really high number. And what I'm trying to impress to people like that is, I'm sorry, but there's too much optionality with newer buildings like Rivage and Paragon and other ones coming. They're just, and those guys aren't far away now. It's getting like a couple of years. It's not 4 years anymore. There's a couple of buildings which are a couple of years out. You're not going to win against those.
You're not going to win. It's a different species of product at this point.
So stop trying to put yourself in the same bucket.
That's a great point.
Because you're not going to get there.
You're not.
And then my next thought is, like, sometimes there's the process of like, will interest rates help these people much? Or it's just not enough mortgage dependent buyers in that market for it to help.
Mortgage dependent, and I don't see a drastic change in interest rates.
Yeah.
So no.
And so the takeaway for you guys out there, if you own one of these units in the 3 to 5, 5 to 10 range, and it's just not moving and it hasn't been working for you, and you're really thinking, okay, what's going on? Give me a call. We'll look at the specifics of the building. We'll dig into it and we'll figure out a strategy to get you moving. But stop letting the ego take control and thinking, okay, well, I know there's a unit down the road, and people keep referencing to me, yeah, but this unit sold for 5,000 a square foot and this one sold for 6,000 a square foot, and mine surely mine should be worth $3,500, $4,000 a square foot. I'm sorry, but no. Because the buyers don't want that. Recognize what buyers want, do something about it, price accordingly, or fix your unit up.
The numbers reflect what the buyers want. The market is the market.
Yeah. Now, the final thing on that is that there's comments, and Craig did this on his report. He said that 85% of the units that are on the MLS are in buildings that are 30 years or old, in buildings that are 30 years or older. I looked in the main cores that I deal with, and it wasn't that percentage. It wasn't as many. I love you, Craig, so this is not for me to break you out. It's much lower. But I think the reason that is because a lot of the older product sits in some of these less desirable neighborhoods. They're kind of like, there's a lot of product that is just not, like, it's not on Collins. It's not on the beach.
No.
It's not on Brickell Avenue area. It's somewhere else. In fact, the percentage of condos in Brickell, for example, that are older is not that many. So two things come to my mind. Number one, it's not a problem right now because that's not the problem with the product moving. That's why we see less sales. And one of the arguments is it's because there's a lot of older product and people don't want to buy the other product. I don't think it's that. I think it's hesitation.
Also to recognize that we had a surge. People have to realize what you're comparing it to, less than when.
Yeah.
Because we had a
and that's really important because everyone keeps referencing the sales from 2 years ago. I've had this with a number of realtors, and they've been like, "Yeah, but it was amazing 2 years ago." And I'm like, "That wasn't normal."
It was a generational event. It was a huge event that happened.
You called it the Black Swan event when we first met during the pandemic, and we went through.
And it was.
Yeah.
And that's what happens. But so if we're going to compare, you can't. First of all, we also had this. We're one of the rapid rent increase in the nation. Median pricing for single family and condos is up almost 80% versus pre-COVID. It's not going to go up 80% again across the board. The next, no, that was a post.
And the rental change is a big factor in a number of markets like the urban core, which are massively rental dependent. And we have a
lot of multifamily coming. So as a city, we have more multifamily under construction as a percentage of existing inventory than any other large city in America. We have 80 projects currently under construction building multifamily.
Does that give you some peace of mind for the...
Huge. I think it's fantastic. It's a wonderful thing.
One of a comment that was made to me yesterday was that 51% of the population of Miami-Dade are a paycheck away from bankruptcy.
Yeah, so even before COVID, even before we had this extreme spike in median rents, we had one of the largest percentages in the nation of what are called cost-burdened renters, people spending 30%, and the next year was 40% gross on rent. And that was before that spike in rent. So we're not afraid to build, and that's a great thing. And again, we have 80 projects, I believe around 80 projects under construction right now in Miami-Dade County across price points. We have projects right now that are surfacing with proposals that would implement the Live Local Act and build large-scale affordable workforce housing. That's coming. So this is all very, very good for the region. I'm very optimistic about it.
And that lens, and I was thinking about that comment of how society functions, because again, this conversation about how Miami is going to be in 5 years from now, one of the things that obviously gets talked about in Miami, because Miami is a city which is unlike any other city in America. It's really unique.
And right now it's in a very unique point.
It's a very unique point. And one of the negatives that's been put out there is that Miami tends to have one foot in a South American economy. And therefore it has these spikes and
but
troughs.
Not anymore.
And this is
I think part of that misconception.
I think this is why I said that, because I think that understanding it's changed. Now, one of the challenges that we have is how we shift from a particular buying pool to a different buying pool, because there has to be a transition. And I think one of the things with moving product is the audience. You have to don't set up a steak restaurant in a village of vegetarians. Sure. If we are shifting from a South American base of buyers who bought during the 2010 to 2018 period heavily, and they were the only ones, but they were a large number, and what they were buying was large amounts of rental product, and that rental product was directly based against the income that it was generating. So, you buy it for $1 million, you rent it out for $9,000 a month. Of course, that's an amazing return on investment.
They just also wanted money out of their country, and they had appreciation on the currency play.
And they did that, but they got the double effect of a currency play plus suddenly sky-high rents, and of course that draws anyone in. Now that rental values are far more matching the value of the asset, in some cases now it's dropping a little bit and people are saying, we know it's not a great return. You start to see more of that rental-based product, not old, but like let's say it's built somewhere between the year 2000 and the year 2015, but small units, 8,000, 1,000 square foot units. Do we have enough of that product? Are we going to build more of it? Should we build more of it? What is the position that buyers and sellers are taking in that price range? Let's say $1 to $2.5, $3 million.
That's the range.
$1 to $2.5 in the urban core, for example.
That's absolutely the range we need, because single family at that price point basically doesn't exist within proximity of the urban core. So an end user product within that below $3 million, $2.5, $2 million range is exactly what we need.
So don't fear that market. Don't fear buying in that market.
No.
It's transitioning out from.
We need that market. We have so much office coming. We have all these jobs, all these people coming, and they're coming to live here. Where are they going to go?
And so the population is rising. is rising.
Actually, sorry, the best performing segment of our condo market in terms of year-over-year transaction volume growth and where it was right now versus pre-COVID, this is for the resale market again, was the 2.5 to 5 million.
It's
Q3 of this
interesting.
year.
So for those who are sellers, again, it's understanding that if you've got a unit, and again, I'm thinking about the actionability of anyone listening to this. If you own a unit, let's say in the urban core, and you're trying to sell it, if you've had it rented out until this point, bear in mind that your next person who buys your unit may not be a renter. It might be an end user.
Absolutely.
And quite possibly will be. Why? Because they can't afford to buy in Coconut Grove.
Well, they can't buy a house for $1.5 million anywhere.
Yeah, which is a really important note to understand the relationship between the condo market and the housing market.
100%. And again, I've seen this. I think these buildings that, again, are not so young, but that are end user buildings without short-term rentals that have reasonable floor plans, they are benefiting from this lack of supply in the single-family home space.
Perfect. So let's now transition into that housing market conversation, because this is kind of perfect. And as we've entered in, you can't buy a single-family home for less than $1 million in Coconut Grove or Coral Gables or
Doesn't
Pinecrest.
exist. Less than 2 million barely exists. There's almost
2 is like, you can get some stuff in there, but it's
hard.
much slower.
Correct.
What's interesting is again pulling up the data, and again again sharing this, and this is just because this is a Q3 report. I wanted to pull up the data for the market. The amount of inventory, the historic inventory that we've seen in the last quarter, if you blend out through the we're very broad range, $2 to $10 million. It's basically the whole market. Is kind of has moved up a little bit, but it hasn't moved up an absolute ton. What's happened is that number of sales has massively dropped in the last quarter in the Grove, Gables, Pinecrest market, and again flashing up, seeing those sales, and the active listings compared to last year, they've risen above what they were last year. So we've got more active listings out there in the market than we had a year ago. The question is that too many, or is that balanced? I see, I can tell you that the data, the count of active listings, we're now over 10 months of inventory, 10 to 15 months in most markets. I've seen certain markets like Pinecrest have more of an inventory rise than, let's say, Coral Gables actually had a drop of inventory. Coconut Grove has had a rise of inventory. There's been fewer sales, more active listings on the market. But I think that doesn't tell the whole story. What I think we have to get into, which is really important to talk about, is the type of product that exists within these markets. Because much like there's a variety of product that exists.
It's new houses that are solutions sell.
Yeah. So
hear from elsewhere, they didn't want to undertake construction projects. New product sales. It's a very similar pattern to the condo market.
So the housing market, what I noticed is much like the condo market. You've got a really split market.
Yes, and back to one point you said earlier about staging and presenting. I think it's important to recognize, again, actionable information to create a solution for the buyer.
Yes, yeah. The buyers out there, I recognize, have been really focused on new product, and there's a lack of new product. And if you go through the Grove, the Gables, Pinecrest market, from the Gables and the Grove especially, it's about 10 to 15% of the market's new houses. 85% is older stuff.
And they're expensive.
They are expensive. And they are, and some of them are, we've had some big sales. There's a sale that just happened, a pending deal that went on Crawford, which is, a small lot, really nicely done home, very turnkey, record-breaking dollar per square foot. We saw a number of record-breaking dollar per square foot for homes in these markets. Newer homes, there's a record-breaking sale in Pinecrest. These, again, you've got the ultra-luxury, very, very wealthy group. When we get into the working wealthy, the 3 to 5, the 5 to 8, the product that's really moving is the newer product if it comes into the market and it's
if
done well.
There's not much. That's
It's not a lot.
No.
But there's a lot of older stuff. The stuff that's old in the 3 to 5 and 5 to 8 is been very hard to sell.
Yep.
That's my feeling, and I've been directly trying to sell that stuff, and it's not easy. 1 to 3 is easier because I think people accept that that's the entry level.
That's right.
So 2 to 3, it should sell. With that said, back to the presentation of the product. Don't allow yourself to list a home that has like lime green walls and really
like
Granny's furniture.
Golden Girls was filmed there.
Yeah. You need to stage these homes you need to make them look fresh because the buying pool is young. It's the transitioning out of Brickell, early 30s. They want a home. They're having the baby. And we've always said this, the robustness of the single-family market is that babies are being born into hospitals around Miami every single day. And then as soon as that happens, people want to move into a home. We do see migration, people moving still down. It has slowed to a degree because access to schools has become difficult. Interest rates have put people on pause. But for the last couple of years, there's a lot of people who have been renting who are now still circling to buy, but they're waiting for interest rates to drop. And much like Craig said it with his thing, the Barbara Corcoran comment that as soon as rates drop, then you get a spike of purchase. I don't know when that's going to happen. That is the thing that I think may be holding us back. So if you need to sell in the next 6 months, 9 months, accept the fact that interest rates are not going to be your saving grace.
I agree with that 100%.
So you just have to make your product look as presentable as possible, which means staging it, painting it, making it look good. Or, and this is something that I'm doing for a client right now, take what the costs of renovations would be, and maybe a new bathroom, maybe a new kitchen. Really go to town for your seller, go and get the valuations done of what a new kitchen will be, and really help them go through the process to say, look, the house is great. Fundamentally, there's a lot of houses that are older, but they're architecturally the same as the new ones, and sometimes they're even better. And get the quote and give people the confidence to know what will happen once you put in the new kitchens and bathrooms and where that market will go.
Paint the picture for them.
Paint the picture. It's a good investment. And make it easy, but price accordingly.
Agree.
I don't see record prices happening for B-type product.
No, I don't either. I see it holding very steady, but I don't see that happening. Correct.
And then obviously, you know, the other big conversation is all about, you know, it's HOA fees in condos, it's insurance costs with houses. And again, a lot of comments about, you know, Miami's going to be underwater, and another comment that came through from here, from my podcast.
I posted a picture of Brickell Key from 43 years ago with no buildings on it. And then I posted it again, showing the skyline, what's planned with the Mandarin, all those things. And it's still there, and the water hadn't covered it in 40 years. I'm just saying.
Well, look, there's a lot of comments, and the people who have commented on my my podcast, and I'm totally okay with it. I'm very happy that you do. I think conversation's important. It's important to have this dialogue. Is saying like it doesn't matter because Miami's going to be underwater in 5 years from now.
How do they know that? They've been saying this forever.
Okay, that I don't think, again, devil's advocate is the problem. I think the problem is the insurance premiums that are going to go up. That's going to catch people. I think that the older homes in the lower level areas are the ones that I tell my buyers to be aware of. And I think the people in the older homes in the lower level areas, if you've done a renovation, it'll help you a little bit. It'll help you move it. But I don't think you should stay there. I don't think that the long-term insurance premiums is going to be sustainable for you to stay in these areas. And so if you invest in homes in the higher area. And I really do push with my sellers. If you're at the flood zone area, I think it's a huge selling point.
Agree.
Huge selling point. So all of this data is going to be readily available. Mm-hmm. It's going to be through the blog that goes along with this podcast. I think you said it perfectly. It's a split market. Would you use the word bifurcated?
Yeah, it's a bifurcated market.
Bifurcated market. Yeah. And this is the most important thing that we take away from these conversations, is that generalized conversations
does
about
not
real
fit.
estate
Doesn't work at all in this case. At all.
I remember 10 years ago I did a video, and my first comment was, generalized conversations about real estate don't make any sense.
And I think less and less, because we are in this period of polarization, wealth gap belief system. We see it in our own market. And I think this is going to play out over the next 5 to 10 years. It's just begun. So now more than ever, I think it's important to recognize which segment you're actually talking about.
So don't get your news about Miami-Dade as a whole. Don't get your news about Florida as a whole.
Recognize
that's not going to help
bias.
You. Try to get hyper-focused market with accurate data. We will provide you with that data. Just let us know what you need.
It's all sourced.
We'll share it. It's all accurately sourced, and it's not second-hand news that we're pulling from someone else. Anna, thank you as always for doing this. Much appreciated.
Times. We keep documenting this.
We do. And we will, because it's a conversation that has to be had. And good luck with your fight coming up.
Thank you. Pan American Championship is ready.
Thank you. All right, perfect. Thank you for watching, and stay tuned for another episode of the Better Decisions podcast.